Welcome, Dr. Raghuram Rajan, Chief Economic Advisor, joins us live and exclusive right here on ET Now. Dr. Rajan, I know it's been a really busy day for you. Thank you so much for joining us on ET Now. Firstly, 4.8% fiscal deficit target for FY14. There hasn't been any big bang expenditure cuts. How confident are you of achieving that target? Because we are heading into an election year and there is likely to be fiscal slippage.
Well, I think you should look at the fact that there's been very careful expenditure management during this year, and as a result, we haven't also announced any big bang expenditure increases for the coming fiscal year. So, I mean, there's been a fair amount of conservatism built into this budget. It's obviously, I mean, one can speculate as to what might happen over the year, but I think the intent is very firmly to stay to the 4.8%.
Raghu, may I ask, what are your assumptions on oil prices and exchange rates? Because, I mean, these are two things which could change the whole balance.
Well, oil prices, the broad assumption is that it stays in the 110 region. And of course, exchange rates, I think the best predictor of exchange rates is pretty much where it is now. You are right in the sense that if oil prices take off, and go into the stratosphere, it will have an adverse effect on any budget. But the intent, or the hope, I should say rather, is that currently with a fair amount of spare capacity in Saudi Arabia, and the intent amongst the oil producers to manage the oil price so that it doesn't deviate sharply on either side, the hope is that over the year it stays range-bound in the 110, 120 range, in which case the projections on oil subsidies are reasonable. The other thing to note is that we do project a fair amount of decline in those oil subsidies as we pass through higher prices to the consumer.
So by when do you think that the diesel subsidy will finally get phased out with these gradual increases? And at the end of it all, will there be a lump sum diesel subsidy that continues as the Kirat Parekh committee and others suggested, or will we basically just be phasing the diesel subsidy out altogether?
Well, as of now, the intent is to keep, the oil marketing companies have the flexibility to raise that price at a steady rate, and I think there is. We have to wait and see, as the previous question suggested. We have to wait and see how the extent of the subsidy develops over time. And whether there's a need for more or less, but at this point, this is the structure in place, and we have to let it develop. After all, we've just had a couple of months of increases.
But Dr. Rajan, do stay with us because we've got the biggest lineup of thought leaders, industry leaders, and market experts joining us right here in ET Now. All of them have some questions for you. Punita Kumar Sinha joins in live as well. She's got a question for you, Punita.
Hi, Raghu. Yesterday in your economic survey, you said that the budget needs a little bit of a lot. So, and that's what the budget really has delivered, a lot of little measures and a lot of things. Now I want you to put on your hat as your IMF chief economist, which you've been in the past. Looking from that vantage point, if you had to look at the budget, would you say there had to be a lot of political compromises, or you think the IMF chief economist would have looked at it very favorably?
Well, it's hard to put myself back 10 years, but I think what the finance minister had in mind was first to get government finances in order. If domestic investors, international investors believe the government has its finances in order, in some sense that gives the best environment both for investments to take place as well as savings to take place. And clearly as a country we need more investment and more savings, again as he said in the speech. So my sense is that was the primary objective of this budget. If we had a ton of money available, we could have given lots of savings incentives, lots of investment incentives, But clearly, in times like these, every rupee counts, and we have to be as conservative as possible. Within that conservative sort of envelope, I think we have still managed to eke out incentives to push activity in the right direction. And so hopefully, when people see both the extent to which we have been conservative on the fiscal side and have created a roadmap for fiscal stability and fiscal consolidation for the government's finances, but at the same time see that we've nudged in certain directions, nudged in the direction of structural reforms in a variety of places, but also in the direction of incentives, temporary but strong incentives to move activity, for example, the investment allowance or the incentive given to home purchases, that we move it in the right direction.
Right. Dr. Rajan, such a delight to have you with us right here on ET Now. We've got plenty of other questions for you as well, but I want to get a quick word in from Uday Kotak, who joins in as well with his perspective on the budget. Mr. Kotak, thank you so much for joining in right here on ET Now. How should the market read into this budget? Do you think the targets set look achievable? Would you call it a practical budget, or do you think the numbers may not add up in the end of it?
I think it's a responsible and realistic budget. I must compliment the finance minister for getting the fiscal house in better shape. 5.2% for the current year and 4.8% for the next year looks something which is achievable, and it is from a situation which was far worse when he took over a few months ago. So compliments to the finance minister and all in the finance ministry, including Raghu on this show, for really bringing the fiscal house back in order.
Prashant, you've always been maintaining that the need of the hour is to kickstart the investment cycle. So to your mind, Prashant, what exactly this budget has done to kickstart the investment cycle?
I think, it has given the investment allowance, and which should help over time. And I think a lot of work needs to be done outside the budget, and I think government clearly realizes that, whether it is the power sector or the road sector or the coal sector. And I think these are issues which the government is engaged with outside the budget, and there is progress on that. So one is hopeful that over time the capex cycle will revive.
A lot more needs to be done outside of the budget as well. Mr. KV Kamath, Chairman of ICICI Bank and Infosys, such a pleasure to have had you for the last 20-25 minutes. I'm wondering if you also have a question for Dr. Raghuram Rajan. Please feel free to go ahead and ask that, sir.
Yeah, Raghu, I think firstly, my compliments to the Finance Ministry. I think this is a budget that, was very difficult to balance out, but it's been balanced. My point is very simply on the current account deficit, because typically you would expect that the fiscal measures taken would also have an impact on the current account deficit, that is the tightening of the fiscal deficit. What do you see as playing out in the coming year on the current account side? And does the government have some more thoughts outside the budget to address this?
Well, that's a great question, because I think the current account deficit is something that we clearly worry about. I think the key issue is, even as we increase investment, we have to increase savings to finance that investment. That's just the macroeconomic identity. Where do we get these savings from? Clearly, more government saving has to be part of the answer, and the budget is a step towards that. But the other part, which is critical, is to get households to move away from, gold as an investment, for example, or structures, but towards financial investments, get their savings up in that way. I think lower inflation over the year, if that is the outcome of the variety of steps that the RBI has taken of greater food production and so on, will help tremendously in making fixed income investments look a lot more attractive, especially as investors realize the value of holding longer term bonds in an environment of falling interest rates. But I am also hopeful that some of these new investments, new instruments we are talking about, perhaps the attractiveness of getting into the stock market for first-time investors through the Rajiv Gandhi scheme, or perhaps the inflation bonds, which we have to make investor-friendly, so that people can go to their bank or go to the local post office and buy an inflation index certificate. Perhaps that will also attract funds away from these real investments to financial investments. But that is something we have to work on over the year. And of course, if we can expand exports on the back of stronger growth in industrial countries as well as many of the emerging markets, that will help reduce the current account deficit. No magic bullets here, but just we have to work very hard on reducing it, but also work very hard on making sure it's financed in a safe and responsible way that is more FDI, more rupee FII, and perhaps reduce the reliance on foreign exchange borrowing.
Right. It doesn't get bigger than this. Chief Economic Advisor Raghuram Rajan, KV Kamath, Uday Kotak, all of us, all of them right here on ET Now. I have one question for Mr. Kotak because I know Mr. Kotak also has a question for Raghuram Rajan. Mr. Kotak, firstly, we do know that the divestment target for FY14 has been set at 40,000 crores. Do you think that's realistic? Do you think there's appetite for so much PSU paper?
Yes, I think divestment targets are achievable. And I do give, first of all, my compliments to Raghu for getting focused back on financial savings. In the last few years, most Indians had moved away from financial savings into gold and real estate. And therefore, a policy focus on that is very welcome. Raghu, having said that, do you think, and there have been a lot of measures I saw in this budget which encourage that. And there are a series of small measures on that, including encouraging alternate investments, securitization, capital markets, mutual funds and insurance. Do you think, Raghu, we get away from India's penchant for gold through these measures, and do you think they are enough for making it happen?
I think the idea, and this is going to be work in progress over the year.
These measures, and do you think they are enough for making it happen?
I think the idea, and this is going to be work in progress over the year, the idea is not to stop with the measures that have been announced in the budget, but to continue working over the year on how do we deepen our financial markets, how do we broaden them to reach every Indian, in a way that will, well, in the short run, help draw them away from instruments like gold, but also in the longer run provide them a good avenue for savings, for pensions, for insurance and so on. So my sense is the budget is sort of a down payment. The finance minister wants to work on deepening, strengthening the financial sector, and more will be done over the year to improve. So see this as a first step rather than the last step.
Mr. Rajan, Mr. Kamath, Mr. Kotak, gentlemen would urge you to stay with us. Sunil Singhania, this question is coming your way. Your current portfolio strategy is that you are bullish on pharmaceuticals, you are bullish on IT. Based on this budget, since you manage nearly 30,000 crore plus in direct equities, are you likely to change your portfolio strategy?
See, Nikunj, budgets are enablers. I don't think budgets nowadays, and we have discussed this earlier, cause too much of an upheaval as far as, sector weightages or sector views are concerned. Having said that, very clearly, again, coming back to the sectors you mentioned, which are knowledge-based sectors, the finance minister has clearly, mentioned so many times in the budget that upgradation of knowledge, upgradation of training, making the youth of this country, and which is a big number, capable of, participating gainfully in employment is going to be a big push. And I think these sectors, again, benefit out of it. Having said that, portfolio creation and portfolio, construction is an ongoing process. It's too early to basically take a call that based on this budget we will do this and we will do that. And I agree with the view which Prashant made that we have to see the steps which would be taken outside of the budget. And there have been some enabling steps in terms of constituting a separate, sort of a body to oversee road projects.
Okay.
There have been some incentives on the investment side. So I think outside the budget.
If I may come in, if I may come in, question to Raghuram Rajan again. Raghu, this is an election year or almost an election year. Surely there must have been all kinds of populist pressures on spending on this or giving that away. Now you have managed to resist that, but we would all love to know which were the kind of populist proposals that were put up to you, which you managed to keep out of the budget.
I have to be, my mouth is sealed on those, but you can well imagine. It's not so much populist as we do interact fairly widely with all sorts of constituencies, interest groups, individuals before the budget. And of course, everybody wants to see their problems as unique, but also their importance to the economy as unique. So every industry wants to be declared an infrastructure industry. Every sector that's paying any tax wants those taxes removed because they are of great national importance. This is, as you can well imagine, something that is pretty consistent across budgets, and that was clear. I think the finance minister has made it clear for some time that this is a budget which is going to resist populist impulses, and perhaps one might imagine because of those firm statements that may also have reduced some of the demands that were made. But nevertheless, I am sure that there were some very strong demands that were resisted. It's hard for me to share them in public.
Mr. Kotak, this is a tough one for you. I know we've been saying that the budget is good on the macro front, but if you would look at some of the things that weren't quite, that aren't quite to probably go to the liking of industry. For one, the tax on diesel SUVs, also higher excise for cigarette makers. A lot of such little proposals here and there that may not be completely acceptable to the industry.
On that, I believe that if you have to correct the macro and get the fiscal deficit under control, you have to get revenue from somewhere, and you get revenue from items which are socially not necessarily the most needed to protect, and that's what the government has done. Collect revenues from those sources and control the fiscal deficit. So I don't see anything wrong philosophically in that. We have also seen an increase in direct taxation in different ways, but that's the part of the price we pay for a mature fiscal situation. I hope the finance minister is able to stick to his commitment next year, which is that the direct tax surcharge is only for this year. So we hope to see that corrected next year.
We're talking about taxes, and Dinesh Kanavar, one of the top tax experts, Deputy CEO of KPMG, also is with us in the panel, and he's got a question for Dr. Rajan as well. Mr. Kanavar.
The question I have for you is, we spoke about infrastructure and the statement that it needs $1 trillion of investment, etc., etc. And one has seen two set of specific proposals to boost infrastructure. One is the tax-free bonds and the amounts which are proposed to be raised in that regard, and the other is the extension of tax holiday for power generation. Do you think this is sufficient really to kickstart this sector? Because this is one segment which in the last 2-3 years has gone down so significantly that it really needs a severe dosage of investment and a severe dosage of kickstart to make it go ahead.
For infrastructure, first is to, on the real side, to get the projects that are stalled restarted, remove some of the the difficulties in getting clearances, in getting linkages, and so on. And as one of your participants, Prashant, mentioned, a lot of this lies outside the budget, lies with the efficient operation of something like the Cabinet Committee on Investment. This is something that's ongoing. Again, I think it's of critical importance to infrastructure, but this is outside the budget. Inside the budget, I think apart from the proposals you mentioned, there's also a lot of work on developing these infrastructure debt funds, for example, both the NBFC as well as the mutual fund versions of it, of facilitating investment in infrastructure by foreign institutional investors. In fact, trying to reduce the barriers in many ways for FIIs to come into the country. We believe that foreign investor investment in rupee instruments is a fairly safe form of investment. If we can attract more of them to it, it'll be very useful both for infrastructure as well as, incidentally funding our current account deficit. So I think that there are a lot of proposals on the financing side. On the, the idea that perhaps what we need to do is a major new project, well, clearly there is a major new project on the way, which is the Delhi-Mumbai Industrial Corridor, a massive $90 billion project, which is now starting to roll out. So that's one big project. But if you are thinking about some new project announcement, there were some of those, but it's very hard to get something started up from ground zero in a short span of time. So if you think about a new infrastructure project which is announced today, it'll probably be 5 years by the time it actually comes on steam. So in a time where growth is of essence, it's more the existing projects that you want to facilitate, financing for projects that are already proposed and thought out, which you want to facilitate. But new projects are going to be of limited value at this time.